Hello and welcome to the Canadian Phosphate webinar. As a quick introduction to Canadian Phosphate, it's an ASX listed mineral exploration company headquartered in Australia, but it has its primary focus in North America with 100% owned properties in Canada in Wapiti and Fernie. These are for phosphate projects. And they recently are expanding their footprint into the US with the Diamond Mountain Phosphate project, which should be finishing the property acquisition in 2026. Canadian Phosphate aims to become a major supplier of phosphate fertilizer using its high-grade, low-impurity rock phosphate. This can be used both for organic and regenerative fertilizer or value-added to turn into other products as well, both fertilizer and also higher value products that could be aimed at the battery market. So, Daniel, I will turn it over to you to go through a quick introduction or a quick description of Canadian Phosphate and where it's at and what the prospects look like going forward. Thank you.
Great. Thanks very much, Anthony, for the introduction. Thanks everyone for taking the time today. So yes, as mentioned, Canadian Phosphate is the holder of the only sedimentary phosphate deposits known in Canada today. And why that's important is because of it's the main source of phosphate fertilizer. And most importantly, it's also due to the fact that Canada imports 100% of its phosphate needs today into the market. And as mentioned, we do have two projects and they form the basis for our strategy in Canada today, and that is in Wapiti and Fernie, which are both 100% owned. But for the purpose of today, I'll talk and focus mainly on Wapiti because it is the most advanced project of the two. But fundamentally, Fernie is following the same trajectory and the same path, but it's 12 to 18 months behind Wapiti. So what you hear about Wapiti is what we're also going to see in Fernie in the future. Just a quick recap on the board and the market cap. We have four directors, myself as managing director, Stuart Richardson as chairman, and Peter Doyle and Mel Webber. We have just finished a rights issue, and on closing yesterday, we were able to raise $5.2 million, which gives us an estimated cash situation at the end of this week of 7 million Australian dollars and a market capitalisation of $56 million with 388 million shares on offer. Let me start with the purpose and the use of phosphate. I think fundamentally everyone understands that it's utilised in fertiliser production. But in order for rock phosphate to be utilised in fertiliser production, for synthetic, I'll say, it does need to be processed. So just want everyone to understand that rock phosphate is an interesting resource, but it's a far more interesting resource after it's been processed, either using sulfuric acid or thermal using heat. But predominantly, majority of the world uses sulfuric acid. Again, why are we in such a strong position today? In my view, it's threefold, but I'll start with the very fundamental that I mentioned at the beginning. Canada produce zero of their own phosphate fertilizer needs. They import 100% of it. They do produce all of their nitrogen, all of their potassium, but they have the critical third piece missing in the NPK, which is the phosphate. We also know, and you've heard, that phosphate is also used in LFP. It's a very interesting topic for us today, and I will go into some detail. It does not form the basis of our strategy, but it does show and give us potential for expansion and development into that space through a various technology. But fundamentally, today we are very much focused on the production of synthetic phosphate fertilizer in Canada for Canadian farmers. And the obvious situation today, and unfortunately there's money in misery, and I'll say that from the Iranian situation, has really highlighted the importance of phosphate and highlighted the very, I'll say, limited supply chains that exist today. Canada imports 100% of their phosphate, approximately 60% from the US, which of course we've all heard about the tariffs that the Trump administration has discussed, which has created anxiety. The other 38 to 40% is coming from Morocco, who controls 70% of the world's known phosphate resources. So we refer to that as the single choke point. I think it makes most countries nervous in all reality. Um, but you've also got the point and the fact that outside of the US and Morocco, the other key suppliers and major suppliers in the world are China, who fundamentally have been producing 40% of the world's phosphoric acid, which goes into the fertilizers, goes into the LFP batteries. Over the last 5 years, they've effectively restricted exports down to a very small volume from that 40% of the global supply. That is the key driver of phosphate prices over time. Russia was also a major supplier of phosphate. So you have these two compounding events. And then Iran was really the straw that broke the camel's back, I'll say, in a way, by the way it's driven shortages, by the way it's driven pricing, and by the way it's highlighted, it's not just phosphate, as I mentioned. The Iranian situation was actually sulfur supply. And that's what's also driven up phosphate costs. So it is quite a dynamic. It is a challenge sometimes to explain it because it's not gold and it's not copper, like many Australian investors are used to. There is this really important element of downstream processing to value add. And I think it's really important to highlight for many Australian investors that have ever had exposure to phosphate, this is not Australia. The clear fundamentals of why it hasn't worked in Australia is why we see the fundamentals working in Canada. And to see that, let me explain what the 4 to 5 major drivers are of a successful phosphate company. Because the vast majority of them are vertically integrated. Very few of them sell straight rock phosphate because it's a low value commodity. They're all value adding it. And in order to value add it, you need rock phosphate, number one, which we have in Wapiti. Second thing you need that's just as important is a source of sulfuric acid. And being based in northern BC on the border of BC and Alberta, we are surrounded by the oil and gas fields up there, which means an abundance of sulfur, which is still not sulfuric acid, but there's a number of processes there converting that into sulfuric acid. So we have the phosphate and the sulfuric acid in very close proximity to one another. We then have natural gas in northern Alberta, which when I was there 4 weeks ago now was trading at $1.31 a gigajoule, relative to the US, which at the time was $5.50 a gigajoule, and in Australia, $16 a gigajoule. So, and I'm talking Australian dollars there, or Canadian, Australian, same today. So it demonstrates the importance of the cost of processing this. In addition to that, and it's a caveat, the natural gas in northern Alberta actually has a higher methanol content, so it's even more efficient and more effective than other sources of gas. The next two things that you need are rail, of which we're I won't say surrounded by, but we have access to rail for CN and CP lines to move it around the country in Canada. And we are sitting on the edge of the Western Prairies. And we all know that at the end of the day, fertilizer is still just a commodity, and logistics plays a key role in whether you're profitable or not. So when we look at where we're situated, what is around us in terms of access, our ability to produce cost-effective phosphate fertilizer appears to be very, very positive. And I say appears because until I have a feasibility study to demonstrate that, I'm not going to overlook those aspects. But fundamentally, it puts us in a very strong position in a country that imports 100% of their needs. So you've also got to understand that from a marketing perspective, fertilizer retailers are buying their phosphate 3, 6, 9 months in advance of the season in order to ensure supply. When they're making maximum $100 a ton on that, and they're paying $1,000 a ton for the product, you really don't need much of a shift in that commodity price before they've completely done all their profitability. And in certain instances, we see them going bankrupt. And not to mention, you're also throwing in the currency risk as well, because it's all traded in US dollars. So here we are in the country, in Canadian dollars, making the phosphate fertilizer. So if I then take it forward to the Wapiti situation and where we're at today, because the fundamentals look too good to be true, to be honest with you. But that's why we are excited, and that's why we see this company moving along in leaps and bounds in the last few months, I would say, because people start to see the huge competitive advantage we have. What has delayed us for a number of years has obviously been the development of Wapiti. We are finally in the stage now with our exploration permit approved, with funding behind us, with contracted drilling starting on the 17th of July. So we're now in a position to actually prove to the market that we do have a significant resource there. And we like to say it's not really mining exploration we're doing now, it's validation. We do have some history of drilling in Wapiti, and we did have an original maiden resource of 1.5 million tonnes, but that was simply to address the organic fertilizer market, which you can see we've passed through that phase. That's still a lovely side business, and I say lovely because it pays salaries, it pays listing costs, it pays insurance, it pays a G&A, which is not so typical, I'd say, of an exploration company. That'll continue to grow, and it's $2.5 million today. We'd like to get it to 5 and eventually up to 10, but it's not interesting for a listed company. Great to pay the bills. The focus is obviously on a single super phosphate plant to produce phosphate fertilizers that growers actually demand. And that's what the market is chasing. So coming back to the drilling program, we expect to complete that towards the end of this year in terms of a mineral resource estimate being provided to the market to show them that we actually do hold significant source of rock phosphate of high quality and relatively low impurities for a sulfuric acid plant. And again, it's more about validation because of the fact this deposit, it outcrops at surface. It's got a strike length of 21 kilometres. We've had bulk sampling permits there before, and we know it exists. What we have to validate is what is the thickness of the seam. We know it's between 1.5. We'd like to get some thicker segments to it. We know that it's typically between 16 and 20%, but we really need to validate this further and expand on that resource through this drilling program this year, and then announce that resource and then move towards the first stage of feasibility studies, which we believe we will start in early 27, sorry. I'd like to say potentially 26, and that's the target, but I'll say beginning of 27 to really start to demonstrate the economics behind this project. And obviously the metallurgical testing will be done then, which will give us some further insights into the beneficiation and the flow diagrams and all of that work that goes into determining our cost of production. Knowing that we have the source of sulfuric acid very cost effectively, the source of natural gas, the growers in the market, the demand in the market, we feel like we're well positioned to weather against any headwinds that do come our way. I think what I touched on is important to understand. Phase one of the company was a long, slow, arduous phase. And I think when I joined the organization, unfortunately, I'll say organic farming is not going to feed the world. There may be a position for it, and that's great. I'm not for, I'm not against. But what I will say is it's still going to remain niche. And as such, so does the rock phosphate as a source of fertilizer. Rock phosphate is not that available to the plant, hence the reason people process it. So that's phase one completed and ongoing. Phase two is really around single super phosphate. And what's important, I think, here for people to understand is we're going with a scalable and modular approach. We're really looking to target a production facility in the range of 100 to 200,000 tonnes, which helps to address our mining approach, which is going to be surface mining in the beginning, which will be nice and simple and easy. We keep below the 250,000 tonne threshold, which avoids us having to go through an environmental assessment for our permit, which I'll say in theory, because everything's in theory with permits, it's an 18-month process. But I guess the point I'm trying to make there is it's not a 5-year EA process. It's a much more pragmatic and simplistic approach. Work still has to be done, and we still have to follow the rules and regulations, but the timelines are significantly different. It also marries up with an offtake agreement, which is right now one of our key focuses. And some people will say, well, you're ahead of yourself, but ultimately an offtake agreement will underwrite this entire project. So we are in discussions with potential off-takers right now, and their ability to commit to 100,000 tonnes I won't say it's easy, nothing's easy, but it's very realistic and pragmatic. From there, we can build up to 200,000 tonnes and then rinse and repeat in Fernie in the south or expand on the facility in Wapiti, depending on what the market demand looks like. But as you can imagine, fertilizer retailers having a domestic source and one that they potentially could invest into at a project level is highly attractive to them. So it's really now about processes and steps to get to the next milestone, following the next milestone and the next milestone. Everything is relatively clearly laid out, but it's going to start with a drill program to get to a mineral resource estimate, to get to the met testing, to start the feasibility studies. In the meantime, we'll continue to work on those offtake agreements, but it's quite an exciting opportunity for us, I believe. And I think we've done a lot of the de-risking, or we continue to look at de-risking this project every step of the way. And I'll give you one tiny example, and again, it's a point in time, but today growers in the Peace River region are paying $650 a tonne for sulfur and calcium. Our product contains the same amount of sulfur and calcium that they're buying for that $650 a tonne, but it has none of the phosphorus that we bring to the table. Now, if I even think about putting $650 in the economics of this, it'll look far too good. Now, I will admit that that is clearly related to sulfur prices because of the Iranian situation. However, we don't see it drastically reducing anytime soon. So we are optimistic, and I'll say cautiously optimistic. The last thing I'll touch on, well, I'll touch on two things quickly, just looking at the time. There is the potential for us to go down the battery route using NovaPhos technology. NovaPhos is a technology out of the US. We have a letter of intent. We've worked with them for 2 years. If that can be proven at scale, that's a huge win for us. And the reason being is it takes run-of-mine product, puts it through a thermal plant that converts it to liquid phosphate fertilizer and PPA for battery grade for batteries. Now, battery grade means 100 different things. All I'll say is it gets us to 85%. The reason I'm so excited about that comes back again to the natural gas being so cost effective in Alberta that the economics look very favourable. But again, that's a cherry on the cake. It's not our primary focus today. The last thing I'll talk about, and very briefly, Utah. Utah was a great acquisition because the opportunity arose. We understood about this for some time. We did our due diligence. And I think we worked with a company that had gold fever, and all they could think about was gold and focus on gold. So we took the opportunity to grab this asset, which is a 50 million tonne resource, 26 million measured and indicated, 23 million inferred. It's a 43-101. So we will focus on closing that acquisition in the next week, I would say, 2 weeks, and begin our process of an exploration permit so we can twin this out and bring it into JORC standards. And effectively, we'll also look at bringing that remaining inferred to measured and indicated. So that I'm not going to put a time frame on it, effectively, we will end up with a 50 million tonne resource, measured and indicated, 20% P2O5, 4.4 metre thick seams on state land in Utah that has less than $10,000 carrying cost. That is a distinctly different end game than what I just discussed in Canada. It's much more likely to be a large phosphoric acid plant, which would require partnership, JV collaboration to bring that into production. That is not something that we would typically look at doing ourselves. But if NovaPhos is the cherry on the cake, then that's on top of the cherry. But again, we'll work towards advancing that to a mine permittable stage and then look to see what partnerships or collaboration exists. Sorry for going a little longer than expected, but I'll leave it open to some questions now.
Yeah, no worries, Daniel. Let's see, what do we have for questions? Can you talk a bit about the milestones you need to see over the next 12 months? I know you sort of touched on them in your talk, but when it comes to sort of getting to the feasibility study, what do you need to see in the way of the timeline to get there? And when do you think that you would start and end the feasibility study?
So, as I mentioned, mineral resource estimate end of the year. There's some debate, I won't go into it, but most likely start a scoping study in
Hmm.
January versus a pre-feasibility, but that's still under discussion. We think
Hmm.
that's really only a 6-month process. Mining from surface is a very simplistic approach.
Yeah.
The single super phosphate plant, they've existed for decades. We've already got quotes out for it. It's a 15 to 18 month build.
Hmm.
And at the same time, as I mentioned, we're looking at an 18-month permitting timeline. But everyone knows I'd be crazy to put a date on that permit. But having said that, we have very good relationships with the Ministry of Mines and Critical Minerals in Wapiti and also the environmental team. And it's not to say there's any preferential treatment. It's not. It's simply they're giving us clear guidance on what we need to do to accomplish our permit. And that's all we ask from the regulators. And that's how the exploration permit went. So the key part to that will be metallurgical testing to
Hmm.
understand the beneficiation process. Fingers crossed it's a simple process, but I'm not going to speculate on what it looks like. But that will also determine what the flow sheet looks like for the SSP plant. So realistically, you've got mineral resource estimate end of the year. June, July, we've got a scoping study completed. During that process, maybe I end up with an offtake agreement. Maybe I don't, but what I will end up with is a partner that is starting to develop the uptake with farmers in the Canadian market. So there'll be either a letter of intent, an MOU. You know, we all understand that they're not as valuable as something that's binding, but there's some work to be done to bring that to market. So I'd say they're the major milestones. Utah is a separate one, but Utah, if we rush, if we're a little bit lucky, we're drilling at the end of this year.
Hmm.
If we're not, we start early in 2027. I mean, fundamentally, we could have drilled 12 months of the year in Utah last year, given the no snow. Um, and the cost in Utah is drastically different to Wapiti. We're probably looking at $200 a meter in Utah. I mean, we'll effectively spend 500,000 Australian dollars to get that to JORC and everything into measured and indicated. That's our draft cost so far, our
Hmm.
budgeted cost. Different to that, because I've seen the question, Wapiti is going to be between 2.2 to $2.6 million. We're looking at $850 a meter. It's a heli program for a chunk of it
Hmm.
for different reasons, but there is some significant difference in cost there. So we'll be spending, let's say, 2.5 million in Canada. We'll spend 500,000 on Utah. We've got closing costs of 750 or a million Australian, but that's one quarter payment, this month, next month, and the other 3 quarters of that payment is in 12 months' time. So that's where a lot of the capital investment's going to go to over the next 12 months. Lastly, Fernie will complete an exploration target on that
Hmm.
by the end of this month, next month, and that will then lead to an exploration permit application for drilling in 2027 at Fernie. But Fernie's 60 kilometres of strike length. It's a significantly larger resource, we expect, but it's also slightly more complicated geology. So we'll probably pick and choose where we go there strategically.
Uh, so it sounds like you've covered the capital allocation priorities. So, with the recent rights offering, are you funded? How far along are you funded
Yeah,
before
so I
you?
think $7 million in the bank today. Like I said, and I'll talk in Aussie dollars, 2.5 million
Yeah,
goes into Canada, to
yeah,
Wapiti.
yeah.
Another, well, if we're going to say 12 months, another 1.5 million into Utah. You're at 4 million, leaves three in the
Mm,
bank. And then I'm going to say there's another $500,000 in net testing and work to be done. That's probably on the high side, but the
mm,
thing that we're just working through now is a quote on the feasibility costs because of this discussion around scoping studies and pre-fees. But
yeah.
imagine there's $500,000 between the net testing and the feasibility studies. So it's leaving you with 2.5, 12 months from now. Not
Mm,
to mention 2.5 minus another 800,000, because one thing I forgot to mention, we are going to be mining our bulk sample in Barnes, and that's a 10,000 ton bulk sample permit,
mm,
and that's effectively $800,000. but the value of that is it's $2.2 million in sales as we put it out to the market to test further. So that'll actually bring in revenue. And we do expect that our sales will continue to grow to bring some revenue back into the company. But I'm not going to speculate on those volumes. Traditionally, it's been between 2.5, 3 million in revenue with
Yeah.
50% margin. So we're in a healthy position.
Yeah. Um, with with your proximity to market and proximity to raw materials, where are you on the for single super production? Where are you on the cost curve relative to the
Great
material
question.
that will be imported?
So today there is very little single super phosphate imported. And the
Okay.
reason being is it's a lower phosphorus content
Yep.
than MAP or DAP.
Yep.
Now, the advantages we bring to the table is we bring 12% sulfur and 18% calcium, but we
Mm.
are 20% phosphorus versus 52% MAP and DAP. The
Yep.
reason being is that logistically moving 20% phosphorus around the world does not make it, it's not very economical.
Mm.
Now, given all the advantages I've spoken to, if you're producing in the market and you're selling in the market, well, there is clear advantages. And to give you an example, today you're paying $1,400 to $1,500 a ton for MAP and DAP. Our expected price for single super and expected things are pretty, changing quite drastically, but we'd be around the $500 mark.
Mm.
So you're really giving growers an opportunity, one, to have a cost-effective source of phosphorus with sulfur and calcium, which is critical for canola, their number one crop, and also for their soils. And you've also, again, it's on a technical point, but I'll give you an example. When you spread 100 kilos of MAP onto the ground, you get 52 kilos of phosphorus. The problem is that phosphorus gets bound up in the soil again and it's not available to the plant. So
Yep.
the agronomists will say, typically speaking, you'll lose between 30 to 80% of the phosphorus that you spread on the ground because it's too concentrated. So we do see a lot of advantages with SSP in that canola market and also for forage and crops. And
Mhm.
given the cost dynamics of it, we think I've had a number of growers said to me, just build it and we'll consume everything you can make. I said, thank you, but my market strategy is not build it and they will come. It's give me an offtake agreement and then I'll build it for you. So as excited as people get, we really want to ensure that we have the offtake agreement signed and binding before we put a shovel in the ground.
Can you, if assuming that you get the offtake agreement and that you can build and expand to 250 and potentially above, can you go through the permitting and studies that need to be done in parallel to being a producer
Great
up to
question.
that 250?
Yes. So the 250 is every year. And that's part of the strategy, which is let's build it, let's develop it.
Yeah.
And at the same time, in parallel, we can go for a major mines
Yeah.
permit.
Okay.
So we're going for an industrial mineral quarry permit to start with.
Mhm.
We're under 250,000 tonnes.
Mhm.
Once we feel comfortable and we think it's a worthy investment of our time and money, we'll go down the major mines path as well. Now that's a double-edged sword and not an easy decision to make at
Yeah.
what point, but it's
Yeah.
part of the
Yeah.
business.
Yeah. Uh, talk about, I guess, selling letters of intent, offtake agreements. Is there any case to be made for you guys just selling direct to the farmers,
It's a
given
great
where you
question, and
are?
I'm ready for the. Not that I'm ready for it, but it's the same thing that's gone around in my own head 100 times. The challenge is the dealer, the distributor, they're going to take 20%.
Mm,
But yeah, well, let's say if we're selling at $500, they're going to want to make $50 or $60.
mm,
Now I could cut them out and save that, and everyone say, "Well, you've saved quite a bit of money and profitability." But my ability to expand and to move across the market is drastically limited. And I can tell you now, employing people and putting people all over the place in a sales team is an extremely expensive process nowadays. I mean, it's just the cost of having someone on the road. And when I joined the company, we had 5 or 6 people on the road. And I
mm,
had to terminate them all, bar one. Sales didn't drop, but profitability went up significantly. It's a
mm,
real headache. But more importantly, to move product around Canada, you need rail sidings and you need warehouses, you need depots. And the people we're talking to have 26 rail sidings and 26 sites to house this material. So the answer is no. I mean, if I was short-sighted, absolutely, but if we're going to build this into something meaningful, you can't have your cake and eat it too.
Mm.
The minute I sell direct to farmers, I get zero support from a retailer.
On the cost side, are you able to, I guess, do you think you can lock in long-term good sulfur costs, or are you going to have to be uh, uh, open to whatever the market price is?
No, I mean, without divulging, it's not that I don't want to divulge too much, it's that they're very preliminary discussions, but we've been
Mhm.
doing site selection already. I've been over to Grand
Mhm.
Prairie, I've been to Edmonton, and we've looked at our options there. And there's two critical aspects, which is what has rail siding or what has the
Mhm.
potential for rail siding, and what is my source of sulfuric acid. There's meetings with sour gas plants and sulfuric acid plants
Mhm.
next door to where we'd look to set up or down the road. So most of them are looking for long-term offtake agreements because despite what you see today in Iran, historically there's a massive oversupply of sulfur, not a massive oversupply of sulfuric acid, but a long-term offtake agreement with very, very little transportation costs is is the reality for us. It's one of the things we hang our hat on. And so we're in discussions already. And by partnering or being next door to a sour gas plant, which is typically they produce a lot of sulfuric acid,
Yeah.
you also get access to the natural gas. Very even more cost effective
Mhm.
than probably the $1.31 I've discussed. So
Yeah.
that is a primary focus. How far do we get from our Wapiti mine and how close is the sulfuric acid? Because if we were to
Mhm.
build in Grand Prairie, 80% of your customers would come and pick it up in their own truck. You wouldn't need rail
Yeah.
in the first instance. So again, significant benefits.
And I guess talking kind of about the market in general, is Canada currently in a, I guess, would you call it a phosphate fertilizer deficit, or is it balanced?
No, it's
Bearing
very
in,
balanced. But
okay,
they tend to they generally get what they demand out of
okay.
the US and out of Morocco. Um,
Mhm.
I think when you start, or sometimes they order out of Saudi or Egypt, and all of a sudden the ship gets diverted somewhere else for a better price, but it's a low percentage. It's really about the cost. I'll give you an example. To get phosphate from Simplot's facility in Idaho up to
Mhm.
the Peace River is $120 a ton in freight, Canadian dollars in freight alone. So it's really, and sometimes people say, why not start Fernie before you start Wapiti? Well, Wapiti's so isolated, and that Peace River region's over 10 million acres. I've created a moat around the rest of the
Mhm.
market for myself. So that's the way we look at it. I don't want to compete with Simplot and Nutrien and Mosaic in that space. They'll eat me up. But what I
Mhm.
can do is compete with them on single super phosphate and position it and market it as a different opportunity for the grower. I mean, as
What?
an example, sorry to waffle on, but some of the growers are driving 14 hours in their truck to go and pick up phosphate down in Saskatchewan.
Hmm.
So there is the clear opportunity, but nothing's ever easy.
Yeah, yeah. And what about how on board is the government with the Canadian government with what you're doing? Well, I guess the local state governments. What sort of
It's a
help
good
are you getting?
question. Yeah, look, there's two aspects to this. They're extremely supportive of us if they know
Mhm.
it. We've kept a very low profile up until this point because honestly,
Mhm.
I've had nothing to talk about. Up until 8, 12 months ago, we didn't have this strategy. It was organic fertilizer, blah, 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 blah. In the
Mhm.
last 12 months, we've developed this. We've just engaged a government relations firm out of
Mhm.
Ottawa and a public relations firm. The government
Mhm.
support for us already is huge. But my argument to everyone is until I come with a mineral resource, I have nothing to discuss. Until I am closer to having a feasibility study, it's harder. There's somewhere between $3 and $4 billion in grants that we could apply for. But every time you go through the fine print, you need to have a mineral resource. In some of them, you
Mhm.
need to have at least done a pre-feasibility study. So I think as we race towards getting these things in place, the opportunity for grants is huge. And look, one came out yesterday, which I actually looked at and think we could apply for that now. But it's always a bit more challenging at an early stage. Not to say there is an opportunity there, there is, and we've had a number of meetings already. I've presented to the cabinet, the Ministry of Finance, for some support, and it was again, doesn't matter what political side you sit on. If you want to supply a domestic source of phosphate fertilizer
Mm,
to grow food to feed the public, it's hard to argue against us. So
yeah.
yes,
Yeah. What's the margin uplift that you get from going from rock phosphate to super phosphate, or I guess single super?
it's look. I don't want to dodge the question. I just don't want to answer it because until we do a
Okay.
pre-feasibility stage, but I will give you an answer. What I'll say is it's not about the margin uplift, it's about volume. No one wants rock
Okay.
phosphate.
Yeah.
And that's something the board and investors have struggled with in this company. When I first arrived to them and
Yeah.
said, listen, not a business. I hate to tell you, but it's not a business. It's not about which one's worth more. It's the fact no one wants rock phosphate other than a handful of organic regenerative growers. But
Mm,
typically speaking, we're making 50% gross margin. We're clearing, we, we'll clear 2 to 3 times the value in gross margin out of SSP than what we get
okay.
today. Is my expectations. As a caveat, we
Yeah.
need to complete our feasibility studies and we need to make
Yeah.
sure we've ticked all the
Yeah.
boxes.
Yeah. Um, you may have answered this before, but why start with Wapiti and I guess,
No, no, it's
well,
a
actually,
good
no,
question.
sorry. And I guess the other part of that question is what needs to be done at Fernie to get to the point where you have either the PFS or a feasibility study to do there?
In Fernie,
Yeah.
okay, I'll answer the first part quickly because although I touched on it, there's a key point to it. Wapiti
Mm.
has the most consistent, simple geology
Okay.
of the two.
Yeah.
So that's
Okay.
why I say we're not going to do exploration, we're going to do validation. We
Yeah.
know it, we see it at surface,
Yeah.
geology is basic. So that's one of the reasons. The other reason is it gives us a major competitive advantage being so far north and away from the
Yeah.
markets. Fernie, feasibility study. I mean, first step is exploration target from Dar Rouge, which using all of the coal drilling holes and all of the
Mhm.
coal work that's been done and some of our own work will help us to pinpoint our exploration program. I mean, at
Mhm.
61 kilometres of strike length, I'll waste a huge amount of money chasing that everywhere. That's the
Mhm.
first step. That allows us to apply for an exploration permit, which then allows us to drill, to then define a resource, then to start a feasibility study. I mean, we're 3 years away minimum from having a feasibility study. If I think about it, you're drilling at best, you're drilling next year on a permit. You're having a mineral resource at the end of 2027. You're starting a scoping study, what the Canadians call a PEA, in 2028.
Mhm.
That's all things going perfectly. But just to be
Uh,
clear, the Fernie mine gives us access to Saskatchewan, which
yeah.
is the biggest market in Canada, obviously.
Yeah. Yeah. So when looking at what you need to execute on all of this, at least for the next, say, 24 months, maybe 36 months, but what do you have the talent you need to execute on plan?
That's a difficult question. It's what I'd say is, I mean, we're either operating at a Grand Prairie, Edmonton, or
Mhm.
Calgary. So in
Mhm.
terms of accessing mining talent, zero risk.
Mhm.
In terms of accessing industrial manufacturers, I think out of Edmonton, zero risk. I mean, the
Mhm.
industrial heartland of Alberta is
Yeah.
huge there in Edmonton. Um, and I'd say the same. Grand Prairie is quite well developed and developing. In terms
Mhm.
of accessing talent, I think one of the ways I think about it, given my background, I worked in corporate for 20 years,
Mhm.
Syngenta, French cooperative. Our VP of mining operations worked at Lafarge and Holcim, the cement companies. When you look at fertilizer, you've got Nutrien, Mosaic, and Simplot.
Mhm.
Any entrepreneurial person generally wants to get out of those companies because it's a huge moving machine that moves very slowly. They get very little
Mhm.
input to. I think
Mhm.
our ability to attract talent out of those companies would be relatively easy. And as an example, it's not the same, but we have Corey Avison on our strategic advisory team. He ran the single super phosphate plant in Geelong, which he just finished
Oh, okay.
decommissioning and closing down. And they closed down. Why? Natural gas cost, sulfuric acid cost, and freight cost to get it, north into the northern parts of Australia. So there is people around, and I think obviously attracting overseas people, international people to Canada or to the US is not a difficult task. The only
Mhm.
prerequisite is you like skiing. As long as you do that, then everyone's happy to move to Canada.
Yeah.
So no, I don't think it is, honestly. I think there's enough levers that we can pull to attract talent. But fundamentally,
Mhm.
our VP of mining operations, brilliant, brilliant. And it's all because he's got an entrepreneurial mindset. He's a generalist in a way, even though he's an engineer, but he has a
Mhm.
very open mind to all aspects. And that's generally the best talent you can find.
Yeah, yeah, yeah. Question from the audience on Utah. For you guys, would you look at it as a capital light project, or given everyone else is?
No, no, I mean it'll be for us to get it developed and
Mhm.
get it permitted. Yes, it's capital light. The reason it'll be capital heavy is it is 100 meters underground. So there is a cost to getting down to it. But
Mhm.
once you're down there, then it's a continuous mine, a room and pillar strategy. But
Mhm.
you're going to want a serious player in the fertilizer
Yeah.
space or the LFP space to make that investment. And honestly, if you ask me what I want today, it's someone in the battery industry because they're price insensitive
Mhm.
to phosphate. It's
Mhm.
so critical for what they're doing. You look at LG and Stellantis in Ontario, they've just finished their $7 billion plant. Volkswagen is now building their $5 billion plant. Right? I may have switched the two, but either way, those
Mhm.
plants are either built or are getting close to completion. And the entire source of battery grade phosphoric acid still comes from China. I mean, you've got
Mhm.
companies in Michigan, you've got Tesla down in Arizona. Honestly, their ability to buy something without too much sensitivity around price is significantly better than a fertilizer group. Fertilizer
Mhm.
group is going to analyze it to death. But at the end of the day, talking recently, as in yesterday, you look at the number of phosphate projects in the US right now, there's nothing.
Mhm.
There's a small one called Murdoch Mountain from a group out of Vancouver, which is focused on the organic regenerative market, all theirs. There's no other major projects that we've come across outside of Simplot, Idafos, Mosaic, and Nutrien. And just Idafos's, they supply all of their product into Simplot. So there's only three marketing groups. So I think we're well positioned to attract a partner, and
Mhm.
particularly, I'll say a partner that would like a footprint in North America. A lot of international companies in phosphate that would like to
Mhm.
have a position in the North American market, given tariffs, given everything that's going on. It's a very valuable market.
Mhm. How depleted are the US phosphate resources?
It's a it's a difficult question to answer from the perspective of if you look at Nutrien, that they have a very
Mhm.
large resource. I think it's
Okay.
387 million tons they've just
Yeah.
announced
Okay.
only this year or the end of
Yeah.
last year.
Okay.
Simplot are a private company, so you
Mhm.
can't get any records on them.
Mhm.
While Mosaic represents 60% of the North American market. They're bringing a vast majority of their rock phosphate out of Peru because they have exhausted the phosphate in Florida. So on one
Mhm.
hand, you've got the largest producer by far in Mosaic at 60% importing everything out of Peru. I shouldn't say everything, but a large majority out of Peru versus Nutrien, which is 30% of the market, and they have
Mhm.
enough for their own needs. And Simplot at the other sort of 10% with Idafos. I suspect they have enough of their own needs too. So it's yeah, it's more about what the USDA is talking about, which is they want to encourage new fertilizer companies into the market. They continually chastise Nutrien and Mosaic for their duopoly, and
Mhm.
I won't say their pricing policy. I think at the end of the day, it's a global commodity, so I don't know that there's any pricing issues truly going on. It's expensive, and politicians are trying to make the average person feel better about what they're trying to do. But the reality is, it's a very tight market. OCP, Mosaic, Madden in Jordan, a group in Egypt, and it's not a big supply chain.
Yeah, yeah. Uh, doesn't look like we have any more questions from the audience. And I think I think my questions have dried up. So if you have a few closing words for us on what looks like some pretty interesting times going forward to just drive these projects to the finish line, happy to get your closing comments.
Oh, look, I'd just say I think it's a very exciting time ahead of us. I think the next 6 to 12 months is limited risk. It's all about execution
Mhm.
more than anything else. We have a very clear path, a clear strategy. We're well funded, and I can guarantee the story of phosphate is not going to go anywhere in the next 12 to 18 months because I think the situation is not going to improve overnight. And I think the more people understand phosphate and its importance, the more they'll understand why it's a critical mineral in the US, in Canada, in Australia, and in the EU. It's fundamental to
Mhm.
food security and also to the energy transition. So we're in a
Mhm.
good space. It's up to us to execute at the end of the day.
Actually, I did have one last question that has come to mind as it sort of wafted into my head.
Yep.
Uh, What makes the Canadian market a more interesting one relative to Australia if you're going to try and be a phosphate fertilizer producer? Is it just the market
How
conditions?
political do you want me to get?
Uh,
Get very political on you. No, it comes back to what I mentioned, Anthony, which is
yeah,
a lot of the phosphate deposits are out in, middle of Queensland.
yeah,
So the cost to get it to port, the fact that there's
yeah,
limited
okay.
energy out there, sulfuric
Mm,
acid,
yeah,
people, the cost of doing business in
yeah.
Australia and just throwing some capital gains tax on top of it and nothing will ever work.
Yeah, okay. So there's logistical barriers and
Yeah.
supply access
Yeah.
barriers
The
that
only thing
aren't
I'd
there.
say, to be fair to some of the phosphate companies in Australia that are maybe in the same space, the best opportunity they have is to dig it out of the ground and sell it to the Chinese. That's the real play. If, in my view, if you're an Australian company, it's
Mm,
like everything. Forget about processing it here. It's
yeah,
impossible.
yeah,
Dig it up and sell it and make a little bit of money so the government can tax you on
yeah,
it.
yeah, yeah. Good. Well, thank you, Daniel. It's been a quite an enlightening and interesting discussion, and all the best for the future. It seems pretty exciting for you.
Yeah. Well, thanks very much for the
Good.
time,
Thank
Anthony.
you.
Greatly appreciated.
Good. Thank
Thank
you.
you. Bye.
See ya.